Hey everyone, Jason Balin from Hard Money Bankers, and sitting next to me, Steve Larray from Larray Insurance. Today we are talking about insurance. I know it's not the sexiest topic in the world, but it's super important, and if you don't have the right insurance policy in place, as a real estate investor, you can really get yourself in trouble. So, Steve, let's jump in and talk about flippers. What are the type of policies that a flipper would need?
When we talk about flipper, we might have either a wholesaler or we might have rehabber.
Sure.
So rehabber is 80 to 90% of what we do. Somebody's going in, they're buying the property, they're going to fix it up, get it ready for sale, and then they're going to sell it. So you need what's called a builder's risk policy. Get in, get your work done. We're going to have liability for people walking in. Actually, I had a claim just last week. Somebody coming in after the work was done, tripped and fell and busted a kneecap. You need builder's risk insurance. We also have some theft of copper pipes, things like that. You need to make sure that's all covered. If you're a wholesaler, maybe somebody that's just buying it, you're not going to do any work, you need a vacant property policy. It's just vacant, it's just going to sit there, you're not doing any work to it. You need to make sure we got the vandalism in there and liability for the reasons that we just went over.
On the builder's risk policy, what does that cover? I mean, that's not a common policy that I think someone would have ever heard of. Like, what does the builder's risk cover?
And that's a great point. This is not like your homeowner's policy. It's going to be more expensive because it's vacant. It's assumed that the property's vacant, no one's in there, except in this case it's going to be people in there weekly doing work on the property, getting it ready for sale. But again, this is not like your regular homeowner's policy. It's a completely different kind of policy. It is vacant property insurance.
Got it. That makes sense. And on because the builder's, so there's the builder's risk element, the vacant element, and then the liability element. On the builder's risk element, does that include loss of materials or any of that stuff?
Things that are owned by the contractor need to be insured by the contractor, and typically it's the contractors. They need their own insurance for their tools. I get this. Well, the contractor's tools were stolen. Well, the contractor needs to insure his own tools.
Sure.
So all that stuff should be insured. Maybe something called an installation floater, where the contractor should really have that insurance.
Sure. Does the liability, and I get this on the lending side a bunch, that a lot of our borrowers reach out to us on, and they say, well, my contractor already has a general liability policy, and I'm assuming that the liability that we're talking about for this particular case is a liability on the property, right? And not just, hey, well, your contractor has liability to protect maybe their them individually. I'm not 100% sure, but what does that liability cover? Because typically it's two policies, builder's risk and a liability. So it's confusing sometimes because there's two different ones on a property.
So typically we write a certain package that has both the liability and the builder's risk together on one policy. And when we do it that way, it's a premises liability. Trip and fall, as I alluded to earlier. Maybe it was snowing out and they say you didn't wipe off the snow quick enough.
Sure.
And maybe somebody slipped. Again, it's a premises liability. To compare that with the contractor's general liability, which is the contractor's policy, he does something at your house and messes up the house or maybe causes damage to the house next door. So that's contractor's liability insurance, and that flows off his policy, which brings up another point. It's really important to make sure you're using a licensed contractor, certainly, and somebody that has insurance. Ask them for a certificate of insurance naming you, the landlord that's doing the work, as an additional insurance, so that you're covered for anything that happens while they're at your property. And a whole other discussion for another day. You'd love to see general liability. You'd love to see workers' comp if they have it.
That's good. That's good to know. Let's jump into landlord types of policy and a rental type of policy. And this comes up a lot with some of the borrowers that we work with, and they say, okay, they send over their insurance policies and it's a landlord policy, and they look at it as, hey, this is landlord policy seems to be the cheapest type of policy out there. I mean, and you can talk about that in a second, but it's like, hey, you can't do a landlord policy. It's got to be builder's risk and liability if you're flipping the house. Don't just try to get the cheapest policy, because guess what? I'm guessing that if you have a landlord policy, it's the wrong policy and something happens, chances are that insurance company is not going to pay you out, so you're just burning money anyways.
Buried within a landlord policy. The landlord policy is, hey, the work's done and we're going to rewrite it to a landlord. You've got a tenant moving in, that's a landlord relationship. Those things have vacancy clauses in it. And what that says is if it's vacant for over a certain period of time, whether that's 30 or 60 days, in several types of claim situations, they don't have to pay anything, and you need to be aware of that. So again, back to the question on the builder's risk, a builder's risk is a vacant property policy, and that's factored in there. But once again, in a builder's risk, once your work is done, same thing, we need to either, are you going to take that into a landlord policy, or is it now just going to be sit vacant while you sell it? And similar, there may be some provisions in there as well. But in general, a landlord policy, if you're a rehabber, is the wrong kind of policy.
Yeah, and one other thing that you were telling me about recently, which I think is beneficial to a lot of you real estate investors that are buying properties, fixing them up, and instead of flipping them, you're going to hold them as rentals. Let's talk about that. I think it was called like, I don't know, some sort of conversion policy. So it's got a builder's risk, and then it can convert into a landlord policy after the fact.
Have a new company we're representing that has a really cool product that if you're somebody out there doing work to your property and going to turn it into a rental, we can write it as a vacant property with the vandalism and all that cool stuff. And then as you're ready to turn it into a rental, instead of having to sell you a new policy, we're going to endorse it over to a landlord policy, and you'll be happy because you're getting a refund check because the premium's coming down, because the landlord policy, somebody's actually there all the time, and the premium's going to be a lot lower than necessarily that builder's risk, which is vacant property and higher risk.
All good stuff. Well, as you can probably tell, having insurance is important. Make sure you have proper insurance. If you don't know what insurance to have, reach out to Steve. I'm sure he'll give you recommendations. Steve, what's your best contact info?
Best contact for us is to give us a call at 410-602-2636. You can check us out on our website, www.larayinsurance.com, or steve@larayinsurance.com is my direct email. Email me and we'll happily get back to you and happily give you a quote or answer any questions you have.
Excellent, Steve. Yep, this stuff's super important. So I know, like we said earlier, insurance isn't the most sexiest topic in the world, but it's super important, and make sure you have your proper policy. Thanks again.
Thanks again.